By the end of this video, you'll know exactly how to buy a home with as little as $10,500, even if everyone's told you need $60,000 saved up. And the third thing I'm going to share, most people who use this program have no idea it's even possible. It could turn you from a renter into a real estate investor. So, settle in. Let's get into it. I want you to hear something first. There's a line that keeps showing up in housing forums and it hits hard. Someone wrote, I'd been saving for 20% for 7 years. Then someone told me I only needed 3.5. 7 years. Saving toward a number that was never actually required. That's not a budgeting failure. That's an information gap. And it's way more common than you think. Here's what most people get wrong about buying a home. They believe you need 20% down. That number gets repeated like it's carved in stone. Your parents said it. Your coworker said it. But there's a government program that's been around since 1934, signed into law by Franklin Roosevelt during the Great Depression, and it lets you buy a home with just 3.5% down. It's called an FHA loan, Federal Housing Administration. Before this program existed, the typical mortgage required 50% down with a balloon payment due in 5 years. The FHA basically invented the 30-year fixed-rate mortgage as we know it. Since then, it's quietly financed over 50 million homes. Here's how the math shakes out. On a $300,000 home, 20% down is $60,000. 3.5%, $10,500. That's not a rounding error. That's a completely different life. And your credit score doesn't need to be perfect. At 580 or above, you qualify for that minimum down payment. Below that, down to 500. You can still get in. You'll just need 10% instead. Now here's something that catches people off guard. That entire down payment can come from gift funds. Your parents, your grandparents, even a cousin. They can hand you the full 3.5%, and FHA allows it. Think about what that means. A family member writing a check for $10,000 can do what $60,000 couldn't under conventional rules. And for some families, this carries weight that goes far beyond money. The FHA's early decades were stained by redlining, systematically refusing to insure mortgages in black neighborhoods. Between 1934 and 1962, less than 2% of FHA-insured housing went to non-white families. So, when a grandparent who is shut out of homeownership hands their grandchild $10,000 for an FHA down payment today, that's not just a gift. That's a generation saying, the door they closed on me, I'm pushing you through it. 83% of FHA borrowers are first-time buyers, median income around $65,000 to $75,000 a year. People who are renting, watching prices climb, feeling like the door was closing. This program holds that door open. The action step is simple. Go to Credit Karma today. Check your score. If you're at 580 or above, you could be pre-approved within a week. One thing though, not every lender will approve you at 580. Many set their own minimums at 620 or 640. It's shadow gatekeeping. The official door is open, but there's a second locked door behind it. Shop at least 3 lenders. A 0.5% rate difference on a $300,000 loan costs you about $90 a month. Over 30 years, that's $32,000. Shopping around isn't optional. It's mandatory. Okay, so that's the foundation. Now here's where it gets interesting, because there's a catch with FHA loans that almost nobody explains until it's too late. It's called MIP, Mortgage Insurance Premium. When you take out an FHA loan, you pay an upfront fee of 1.75% of the loan amount, about $5,250 on a $300,000 loan. That gets rolled into your balance. Fine. But then there's the annual MIP, paid monthly. At the current rate of 0.55%, that's roughly $137 extra every single month. And here's the part that stings. Put less than 10% down, and that MIP stays for the life of the loan. It never drops off. On a conventional loan, private mortgage insurance cancels once you hit 20% equity. FHA, you could be paying it in year 29. $137 a month for 30 years adds up to roughly $49,500 in insurance premiums alone. That's real money. So, is FHA a trap? No, it's a bridge. And here's how smart buyers use it. You get into the home with FHA, you build equity. Once you cross that 20% equity threshold, you refinance into a conventional loan and drop the MIP entirely. FHA even has a streamlined refinance option. Often no appraisal needed, less paperwork, faster close. A buyer named Maria in Phoenix did exactly this. She'd been renting at $1,450 a month and saved $12,000 over 2 years. She used FHA to buy a $320,000 home. She still remembers the closing table. 150 pages to sign, her hand shaking on the last one. Her monthly payment came to $2,100, including everything. 4 years later, she refinanced into a conventional loan, killed the MIP. Her payment actually went down. She wrote afterward, "The MIP is annoying, but I refinanced out of it in 4 years once I had enough equity. Worth it." 100%. 5 years in, her home was worth $410,000, over $90,000 in equity. The program didn't trap her, it launched her. And here's why waiting is the real trap, and why this matters right now, not next year. Say you hold off and save for 20% on a $400,000 home. That's $80,000. Sounds responsible. But home prices in most markets rise 5 to 7% a year. 5 years from now, that same house costs $480,000. Your 20% target just jumped to $96,000. You saved for 5 years and ended up further behind than when you started. Every month you wait, the gap between your savings and the price tag grows wider. The market doesn't pause while you catch up. Bankruptcy data shows the typical homeowner who bought in 2013 had gained $225,000 in equity by 2023. 10 years of wealth that renters never saw. The clock is already ticking. Use FHA as the starter loan, not the forever loan. If this is clicking for you, hit subscribe. I drop videos like this every week. And stick around because the best part is still coming. All right, this is the one I've been saving for you. Most people think FHA loans are just for single-family homes. A little house with a yard and a mailbox. They're wrong. FHA loans work on 2, 3, and 4-unit properties, duplexes, triplexes, fourplexes. As long as you live in one of the units, you can buy the whole building with 3.5% down. Let that land for a second. This is called house hacking. It's how ordinary people with modest savings become real estate investors. Here's a real scenario. You find a duplex in Cleveland for $400,000. Your FHA down payment is $14,000. You move into one side. You rent the other unit for $1,200 a month. That rental income counts toward your qualifying income and offsets a massive chunk of your mortgage. In some markets, the rent covers nearly all of it. You walk out your front door, and the tenant next door is paying your mortgage while you sleep. You're building equity in a property you own for less than you used to pay in rent. Now layer on everything we've already covered. Sellers can contribute up to 6% of the purchase price toward your closing costs under FHA. Double what most conventional loans allow. There are over 2,500 down payment assistance programs across the country, and 87% of U.S. homes qualify for at least one. Stack those together with the gift fund rule, and some buyers are getting into income-producing property with almost nothing out of pocket. The National Association of Realtors puts it plainly. Homeowners' median net worth is about $300,000. Renters, $8,000. That's 40 times the wealth. And a lot of the people in that homeowner column started right here. With an FHA loan, 3.5% down, and a plan. The home you buy with FHA doesn't have to be the home you keep forever. It's the home that gets you started. And one day, maybe sooner than you think, you're standing in the doorway of a place that's yours. The keys are heavy in your hand. The landlord is gone. So there you go. 3 real ways to use FHA loans, from the basic 3.5% mechanics to the MIP strategy that saves you tens of thousands to the house hacking move that most buyers never even hear about. You came here to learn how to buy a home with a small down payment. You're leaving knowing how to build wealth with one. If this helped, share it with someone who's still renting and thinks they can't buy, and subscribe. Next week, I'm breaking down exactly how to find those 2,500 down payment assistance programs and which ones are worth your time.